All right, welcome back, everyone. It's been a while since I've uploaded, but most of you all know, as I take a break, I come back with a banger every time. And yeah, I just don't want to flood the YouTube channel with just random uploads. I try to keep it quality on here. Um, and yeah, so throughout all platforms, I think the most asked question I get always has to do with placing the fib. How do I place the fib? How do I project standard deviations? How do I know what high and low to use? Um, how do I know to use the first distribution or last manipulation leg? Okay, many questions, all will be answered in this video. Okay. After this video, I'm sure there will be no more questions on projecting, and if there is, I'm sure you can solve it by backtesting and rewatching the video. All right, so let's get right into it. Right away, I'm gonna let you all know it is a little bit informative here at the beginning. I have some slides here, but it's gonna go over some great rules to have as well as we get into the rough drawings. And trust me, some people hate the rough drawings. They're like, oh, this isn't price. We're not looking at a real example here within price. Trust me, it is playing out the same exact way, and it will help for whenever you get into the charts. But right away, here, what are you projecting? You really got to think whenever you're projecting. We're not just projecting random legs in price, okay? We are projecting power of 3, okay? And obviously you can break it down to a specific power of 3, and you must know what you are projecting. All right, we're not just projecting because there's SMT or we hit our standard deviation levels. Okay, there's only 2 ways to project: the last manipulation leg and the first distribution leg. All right, we're going to get more into choosing those later, but I think the first rough drawing I show is going to have a light bulb go off in many of your heads like, oh yeah, this does make sense of why you should use the first distribution leg. Okay, time plays a huge role. Really focus on that opening price of the power of 3. The high and low that you are projecting must be inside the same power of 3. Okay, so if I'm projecting the 10 a.m. power of 3, for example, I'm not trying to key the fib from a high that was after 10 a.m. to a low that was before 10 a.m. Okay, because 10 a.m. was the start of that new 4-hour open. Okay, so if you're projecting that 4-hour power of 3, that's not what you're looking for. Obviously, you're going to have times where you're keying it at different times if you're projecting the midnight manipulation, because that's the daily manipulation. That's a lot different than a 4-hour. Okay. Time frame alignment is huge. Just within projecting, okay? You want the highs and lows to align between time frames, okay? I've talked about this before, but for example, when I'm using a 5-minute projection, I want the highs and lows that I'm keying the fib on to align to those higher time frame highs and lows, okay? I don't want to see where I'm keying the fib on the 5-minute be just like the middle of the candle on the 15-minute or the hourly candle. Okay, that does not look good. You want to have the time frame alignment there. And there's also times you must be patient. Okay, you've got to wait for a valid swing, a valid projection to form. Okay, and I know that's where a lot of people get cooked because they can't wait. They always got to be in something. Come trade with me. You're going to learn real patience. All right, rules for projecting. The highest probability projections include the following: price is reacting from the standard deviation levels from a previous swing. Okay, so In some instances, this is me trading the 10 a.m. power of 3. We're reacting off of our standard deviation levels from the midnight swing, for example. Okay? And then 2, we see SMT. In 3, this one isn't always required, okay? Especially when we're just moving up into all-time highs, but a higher time frame level and PD array or PD array. If you can include that as well, it's a really high probability trade, okay? And obviously projecting the last manipulation leg. To me, this is so much more high probability, and you're more likely to catch the move whenever they give the last manipulation leg. Because a lot of times you'll notice whenever I'm projecting the first distribution leg, it's whenever we either didn't leave SMT or we put SMT in before that new power of 3 opening, and then they just traded straight away from the power of 3 opening price. So there's also times you're going to see me project without SMT. But typically, whenever I do that, I'm not looking to play the move through that swing. I'm instead trying to use that swing to find the higher low, to play the reversal, to take it back to that higher low where we left no SMT. Okay? Hopefully that makes sense. If not, listen back to it, go look at a couple examples, and I guarantee you it will. So before we get into the live charts, I want to go over some rough examples here, and we're going to test your thinking skills because these are two totally different examples here. They may look the same, but look a little closer. There's something completely different that changes the way you would project from this example on the left to the example to the right. And if you haven't noticed yet, it's the power of 3 opening price. Look where it opened at. Okay? So think right now, how would you be keying the fib right now if we're looking to play a reversal down? Okay, so we're seeing everything we need. We're meeting our standard deviations from a previous swing. We're seeing SMT, okay, and we're manipulating the power of 3 opening price. So how would you project these? And yes, they should be different. Okay, so just think right now and pause the video for a second. How would you be keying the fib and see if you're right here? Okay, so for the first example, this would be the last manipulation leg. There is a last manipulation leg here. They give the power of 3 opening price before they created the low here to run up that creates SMT that runs into the standard deviation legs. So when we're projecting, if you go back to the rules I was talking about, the high and low you're projecting needs to be within the current power of 3. Okay? So if we're projecting this here, we can project this last manipulation leg because it's within the current power of 3. So I'd be keying it from this high to this low and looking for the downside. Okay? And then the right example over here. This is actually an example where we would use the first distribution leg. There's not a last manipulation leg to use here. Okay? The power of 3 opening price was left here in the middle before they ran up and created SMT. The low here would not have been inside the current power of 3. So that to me would not be a valid projection to use, and why I would be keying the fib from this high to this low. Okay, and looking at that to the downside. All right. So you might need to watch this back a couple times. Really focus on where that opening price is. Obviously, these two examples here were for a bearish setup. Literally just flip this upside down and you have the bullish setup for it. Okay. It's no different. It's the same thing. And this is exactly how price is printing. Okay. So, like I said, you might need to watch a couple of these things back again, but we're going to go ahead and get into the chart examples. All right, so right away, as we get into the examples here within the chart, so We're going to be looking at a weekly power of three here. And it's no different when you're going down to a 4 hour power of three, a daily power of three. It is all the same. We're projecting the same way. Just focus on that opening price for the power of three. So as you can see here, as they came down, opened the week, they've ran out all of this sell side liquidity, and that also played into our bullish bias we are having for this week. So right away, we were using this first distribution leg. There was no last manipulation. Look at the weekly open right here. Where is the manipulation to project? Where is it? There is no last manipulation leg. Okay. And once again, we're on the 15-minute time frame. Let's go up to the hourly, for example. Does this align? Look at this. The high and low we're projecting align up to the hourly time frame here. Okay. So going back to that time frame alignment I was talking about. So to me, this would be a valid projection. And you can see we are very bullish. We went up, we expanded right above the 2 to 2.5. They gave a little retest of it and continued right up to 3.5 to 4. And then you can see here, they expanded through 3.5 to 4, came back, gave a retest, one more love tap, and then off for the races it was. Okay. So just showing you these first distribution legs work. You really just got to focus on that power of three opening price. It will tell you a lot. All right, and I'm getting the first distribution leg examples out of the way here first. I'm going to get into the last manipulation next. I'm probably not going to do a whole lot of examples though, because it's the same thing in price all the time. You can go back and look at these things. I'm giving you the rules for them. You just got to do the work to be able to see it yourself. You're not going to be able to watch a 5, 10, 30-minute YouTube video and just be able to see it and trade it or project it yourself. All right, it's going to take time. But once again here, this is also a weekly power of three. I do feel like often it happens where I'm projecting a first distribution leg more often in a weekly power of three than anything, but it can happen in any. Okay, so once again, they give the weekly open here. There is no last manipulation leg for us to use here. Okay, ES was the one that came down, made this lower low, created our SMT there. So to me, I was using once again the first distribution leg. And let me go down here to the 15-minute. Okay, it looks much more clear here on the 15-minute. This high to low that I'm using to project this first distribution. And you tell me if it was a valid projection. Look at that reaction right there at 2 standard deviations. Reaccumulation, boom, expanded through 2 to 2.5, and then slowly made its way up to 3.5 to 4. And then look at the reaction at 3.5 to 4 standard deviations. Full reversal, right back to the weekly open. And why did they do that? So that then they could give a new swing to the upside for us to move to after that, because we already completed what we had currently at the weekly open, that first distribution leg. And once again, talking about the time frame alignment, you can go up to the hourly 4-hour chart and you're going to see the highs and lows that I'm choosing here align to highs and lows on these higher time frames. Okay, that is very key for a valid projection. All right. All right, so this example is a little different here. This is an example where I had to be patient. I had to wait for the next thing to happen. I had to wait for the market to show me its hand again here. So this day we had our bearish bias. It played out perfect. We moved down our standard deviations 3.5 to 4. And we actually broke through it as I was anticipating here. Okay, we expanded through our projection. So once we did that, I had to wait for something more obvious. Okay, it wasn't yet that obvious to me where we wanted to reach for lower. So I was waiting for the next day. That's how simple it is. I waited for the next day, our new power of three. And that next day, we actually had a new monthly open. Okay, so here they gave the new monthly open. And what did they do? they gave a last manipulation leg here of the monthly open. So right there, I was trusting that to the downside right away because one, we expanded our below the projection from the previous day. So that was already indicating that we were very bearish or we were very one-sided and likely to continue lower. So from there, we were using that last manipulation leg here, what they currently had at the monthly open. Um, and you can just see how well 3.5 to 4 gave the low. All right, right back up to the monthly open we went after that. So just showing you again how there are times when you have to sit on your hand when it's not obvious. You got to wait for something more. It's okay. Okay, you don't have to always know what's happening. Okay, but you do need to know when you need to be on your hands and not in a trade. All right, another good example here. So you can see I'm using this last manipulation leg here, but you're probably like, oh, but why aren't you using this high right here or even this high? Time frame alignment. And again, ask yourself, what are you projecting? What am I projecting here? It's actually the monthly power of three. So let's look at this. We have our monthly open right here. All right. So we moved down, we created SMT, we manipulated our monthly open. So from there, I was ready to project, but why am I not using these internal highs here? It's as simple as time frame alignment. Go up to the daily chart and you'll see this. This made it much more clear of the last manipulation leg. Okay, sorry, I have that monthly open marked wrong. It's right here. But either way, it's the same thing. This was that last manipulation like here. They ran it down, manipulated below the monthly open, made a new current monthly low there. Okay, that was the manipulation. You can see just how well the standard deviation played out. Okay, they went up 2 to 2.5, gave that reaccumulation, and then they slowly delivered it here up to 3.5 to 4 and all-time highs. So that's also how I was anticipating all-time highs as a nice draw on liquidity. Okay, so another great example here. Always be focusing on that time frame alignment and know the higher time frame power of three, the higher of time frames for the time frame alignment. All right, so once again here, we're going to be looking at a first distribution leg. Okay, so we're looking here after this aggressive move down. Okay, so this was hitting our standard deviation levels, our higher time frame array being a daily fair value gap, along with seeing SMT. So from here, we were looking at our power of three opening price, and what was that? 10 a.m. Okay, and what did they do from there? They just traded straight up and away. So in this case, once again, there was no last manipulation leg. But if you're still looking closely, the high and low that I'm keying the fib is still within this current power of three. The low was at 10 a.m. The high was at 10:15. So once again, we're able to go up to a higher time frame and still see that time frame alignment. Okay, and you can see just how well that swing played out. Okay, it took us some time. We consolidated in here, went down, wiped out that liquidity, and then it was off for the races up to where 2 to 2.5 standard deviations, and that stopped us here for a little bit, reaccumulation, and then on up to 3.5 to 4 we went. So just once again showing you got to really think and look at price. Is there a last manipulation leg? If not, you are projecting the first distribution leg. Okay, and honestly, I'm just going to move into the next day here for the next example. And this will probably be the last example here before I start to go into trades I've taken. I'll be reviewing old trades and showing you the just how I keyed the fib and all that good stuff. So right here going into the next day. So we know we had not completed our swing yet, but as long as this low is not taken, this is still a valid swing and should play out. So let's look closer at this next day. Well, let's look at the midnight open, for example. So they gave the midnight open right here. This was our daily open. Notice what they did after the midnight opening. They just consolidated price. All right. And you could actually project this down as well, because I remember actually playing the short on this. But you can see that manipulation that they had, the current manipulation of the midnight open, we moved down 2 to 2.5 standard deviations, which took out all this liquidity they were building up. We still stayed short of that low from that 10 a.m. projection we were using. So then from here, we can project this midnight manipulation move because we anticipate us to be bullish. The draw is still higher. Our standard deviations are still telling us higher. SMT is telling us that. Okay, we moved our standard deviations to the downside. We have SMT, back up we go. And right here, this is what this is power of three alignment. Okay, whenever you have more than one swing aligning like this. Okay, so you can see that 3.5 to 4 of that previous swing was aligning with 2 to 2.5 of this midnight manipulation. Well, you can see by the end of the day, we still hadn't reached that standard deviation. Playing into the next few days, you can see we slowly made our way up there. And then you can see the reaction we got right here at those standard deviation levels. Okay. It's not random, it's happening all the time. You got to trust those standard deviation levels. Sometimes it can take time to play out whenever we don't have any good high impact news drivers, or they've been moving price randomly off some, like a Trump tweet, some manual intervention, something like that that's not as predictable as other scheduled news reports. Okay, so really be thinking about those things whenever you're projecting. Okay, and looking at those previous projections, and keep in mind of the ones we have not completed. All right, it tells a lot for what's to come in the future. And notice the difference here, that first distribution versus last manipulation. All right, so here's we're getting later in the video. I think a lot of these last examples here are going to come from just trades I've taken, and we're going to be breaking them down here and looking at the leg and price I was using, the last manipulation leg, the first distribution leg, and why. Okay, so right here, looking at NQ, I took a long here. All right, we had a higher time frame array and draw higher. Okay, and our 2 to 2.5 standard deviations was just above. But why am I using this projection here? Well, it's hard to see here with how I have the power of three indicator, but this right here, this sideways line, this horizontal line, that is the 10 a.m. open. Okay, you can see it more here on the ES. They open that 10 a.m. open there, but either way, NQ comes down, it makes a new 4-hour low, and in that time we manipulate the opening price. Okay, and the ES comes up short of making the new low, and on top of that, it even failed to manipulate the 4-hour open right there. So a double SMT there. And then you can see, um, well, I'll play it out here. I have it muted, but you can see from there, we trade higher back into the gap. I think I did get stopped in profits here on this last contract, but um, it still ended up playing out to the standard deviation levels. It's all about following the plan, okay? What are you projecting? Where did they open the power of three? Okay? Just where they open a power of three opening price can tell you a lot for how the buy or sell model is about to deliver. All right, so in this next example, I thought this would be a pretty good one here because I use two examples inside this trade. So let's get in and see here. So right away, I was using this last manipulation leg here, where we manipulated through the CPI high. This was also still within our 6 a.m. power of 3. Okay. So I was anticipating this high to hold going into 10 a.m. So we wanted to see the 10 a.m. somewhere in here or even lower so that they could manipulate above it without taking this high, because we already had a higher time frame SMT with the CPI high. So right here, we're using that last manipulation leg once again because we have SMT. There was a last manipulation leg there. So right here, though, watch what we do. The same thing between NQ and ES, but watch how I project this right here. Well, let me fast forward. So I smack the fib on in just a second right there. First distribution leg. Why is that? Well, the NQ and the ES both came back up. They manipulated the 4-hour open. Neither created a new SMT there. To me, there was a first distribution leg there. There was no last manipulation. And something that proves that that swing was right was looking at how it aligned with our last manipulation leg. Look at this. 2 to 2.5 standard deviations right with each other. 3.5 to 4, both down there, right with the midnight open. Okay. Things like that, when you see them align, it is key indications that you are likely using the right swing. So here as we go into the end of the video, I really hope you got something from this. Hopefully you got that light bulb thing you needed for the way you should be projecting, what you were doing wrong, okay? Um Obviously, you're not going to get it right away. I've said it many times in the video and I'm going to say it again. Confidence in your model comes from back testing, okay? I have back tested and I have the data to support my confidence behind taking the setups, okay? I have the facts to prove I could lose 4 in a row, but it's still statistically supposed to play out, and I will take that next setup, okay? Confidence comes from back testing, not forward testing. If you only try to forward test this in price after this video, it's just not going to work out. I promise you. Back test, put the time in, and learn it. And I promise you're going to start seeing and calling price with much more accuracy. All right. Hope you all enjoyed. Leave a comment, leave a like for me. It helps out. Later.